Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about the latest news updates in regards to SoFi Technologies' overall share price. In this video, we will be discussing how professionals believe the overall share price for SoFi could increase throughout the next few months, especially as macroeconomic factors start to become under control. We'll also be going over their latest news updates, price predictions, and where I personally think the stock price is headed in the future. So for more videos on SoFi Technologies and their updates, remember to go and smash that like button right now, comment your thoughts down below, subscribe if you are new, and without further ado, let's just jump right into today's stories. Like I said earlier, analysts, professionals, experts, and even bullish investors believe that SoFi Technologies is trading at a discount, so they believe the current share price could actually increase. Currently, the SoFi share price, or ticker symbol SOFI, is trading for $7.43, but many bullish investors believe the company could even go higher, so let's look at the evidence for this. As of right now, investors are extremely excited that this personal online finance company is showing impressive growth, especially as they gain ground toward achieving a profitability. This has caused investors to dump money into the SoFi stock because they believe once the company does become profitable, the share price could absolutely pop. On top of that, SoFi Technologies offers one of the highest interest rates for their financial accounts, which currently comes in at around 3.75%. They are literally paying you just to hold your money in their account. So SoFi has one of the best high-yielding savings accounts you could possibly ask for. This again has invigorated investors to potentially buy more into this overall company, considering that they are blowing the competition out of the water. Plus, it also maximizes your money to make it go further in this inflationary environment. As of the start of 2023, the share price has been performing extremely well, as you can see on screen. We see a radical increase in their overall share price, and many professionals believe this trend is just starting. However, like I will talk about at the end of this article, there are other investors that believe and professionals that think the share price will end up falling back down. But let's not get too ahead of ourselves. Right now, SoFi is doing phenomenal financially. For instance, SoFi Technologies narrowed their overall net losses by 34% down to just $320 million. Again, this pushes them closer toward profitability, where the CEO of the company believes they will achieve profitability by the fourth quarter of 2023, and that's what is really making investors excited. On top of that, various professionals have chimed in with price targets. Let's start off with Jefferies Financial Group. So an analyst from Jefferies actually sees that SoFi Technologies could continuously appreciate in their overall stock price, and he gives them an $8 price target. And this is a 12-month stock price target, which means that the company is going to grow pretty consistently until the end of 2023, once they become profitable. And to add more fuel to the flame, we also see another analyst that is even more bullish on SoFi Technologies, to where he highlighted that due to the company's increase in deposits, they're rapidly scaling their overall revenues, and them achieving profitability by the end of the year, he believes the company could be worth around $10. So overall, these are very positive developments for not only how the company is looking financially, but where experts think the company is headed in the future. But that's not all. Let's talk more about their financial strength and their overall fundamentals. Management is eyeballing profitability right now by the end of 2023, and right now may be a good time to consider an investment in SoFi Technologies if you are sitting on the sidelines. However, if you are already invested into this company, make sure not to overexpose yourself to any risky singular growth stocks such as SoFi Technologies, because that would be improper risk management. I currently, as of right now, only have a 4% allocation to this overall company, and I am biding my time to where eventually I will increase that to a 5% allocation, but clearly I'm not going to overexpose myself more than 5% allocation to this company, because that would be improper risk management. There are so many other fantastic companies and deals and stocks to buy on the market right now, apart from SoFi Technologies. But I do think SoFi Technologies is really showing their overall strengths to investors, and professionals are really keeping an eye on them. They are an extremely high revenue growth company that is continuously scaling, and according to their accounting ratios, they are trading for pretty cheap. The company is also improving their net income margin, which could also send the overall share price higher. So that's again something to look forward to if you are an investor. But even with that being said, like we've mentioned before, the main draw to this company is their overall profitability, because many many people believe the share price will explode upwards once they actually bring in their first quarter where they are GAAP profitable. I'd also like to bring to your attention that SoFi Technologies is extremely competitive within their own space, because much of their competition is dealing with around a negative 9% net income margin, which is looking very good for SoFi Technologies, considering that SoFi is one of the rare companies in this particular space that deserves a deeper look, a better dive, and they also bring in better margins than these other companies. Now, something to be aware of is that SoFi Technologies does have stock-based compensation, which is acting as an anchor for this company in somewhat of a negative way, but also a positive way. Stock-based compensation allows them to attract high-end, top-tier financial analysts, underwriters, and other types of employees who will further the overall business's reach. So this is a short-term necessary evil that the company is doing. However, overall, I do think that they are doing this responsibly, to where their stock-based compensation as a percentage of revenue declined by around 16% due to their overall increase in revenues. And this is a huge improvement from the prior year, where they had a 27.5% SBC percentage compared to the revenues. So clearly, SoFi Technologies is getting better in this regard as well, making this company overall less risky. Since the start of 2022, SoFi Technologies has also been growing their overall deposits. They originally started with just around $1 billion, and they have since improved this metric by 7 times, to where now they have around $7.3 billion as of quarter 4 of 2022, according to their most recent earnings report. This again shows us that the company is rapidly scaling in their overall revenues, their deposits, and it shows that customers and consumers and clients of theirs really like their overall products and services. But let's also not forget one of the most important metrics, which is how fast SoFi is growing their overall revenue. SoFi grew their net revenue by 60% from fiscal year of 2021 to the fiscal year of 2022, and many professionals believe this company is just getting started. Now let me tell you something as an investor. SoFi Technologies will not be able to maintain or retain a 60% CAGR. It's too high, and as the law of large numbers starts to take effect, we can see that this overall number will decrease. But this doesn't mean that SoFi is going to necessarily stop growing. It just means they're not going to grow as quickly. Ideally, we would want to identify a company that is growing at or around a 30% CAGR or compounding annual growth rate, because that would equate to a rapidly growing company. And as of right now, their future projections of growth do dictate that the company will be growing at around a 30% CAGR in regards to the revenue. This is mainly going to be due to SoFi's payment processing platform named Galileo, as well as their cloud-based banking platform called Technisys. And both of these companies were former acquisitions that SoFi ended up buying, and it's going to benefit SoFi in the future. And Galileo particularly has brought in 11 new clients as of quarter 4 of 2022, 9 of which already have existing customer bases. And that means that Galileo will start to pay off even more as SoFi continues to grow. One of the best things that I've noticed for this company improving their overall fundamentals and of course their financials is that not only did the company's financial services segment grow its overall products by leaps and bounds, but their annualized revenue per product increased from just $21 up to $40, which is absolutely astonishing. And all of these little news updates in regards to upcoming catalysts, such as the student loan moratorium potentially ending, increases in their overall revenues and their CAGRs, plus the company being projected to bring in GAAP profitability by the end of 2023, this all reflects very positively on the overall company, and of course this is going to translate into a higher share price. But lastly, I would want to bring to your attention that SoFi Technologies is trading at a very impressive price-to-sales ratio of around 4.1. Now, compared to other banks, this may not seem impressive, but compared to other growth companies, this looks phenomenal. Because if they were continue to grow between 25 to 30% throughout the year of 2023 and beyond to 2025, this price-to-sales ratio will drastically drop, which is good news, because that makes the company a better buying opportunity for investors, which will then increase their overall share price. So ideally, we would want a lower price to sales ratio, but considering the amount that they are growing by, it will naturally force this price to sales ratio even further down, making them a better buying opportunity, a better value for investors, a safer safer stock to buy, and this will increase their overall share price, which is literally a win-win-win situation. I am looking forward to SoFi to continue to thrive over the next few years, especially as the macroeconomic environment starts to become better. Put together, this company is very well diversified in their revenue streams. We have upcoming catalysts, such as the student loan moratorium ending and them achieving profitability by the end of 2023. We have experts saying that this company could increase, and we have the macroeconomic conditions that are becoming better, which will increase investors' appeal to buying this company. But it's not all rainbows and sunshine. For instance, we have a few analysts who are somewhat naysayers about this company, but let's start off with some positive news. Over the last month, the SoFi share price has gone up by around 61%. Over the last 6 months, that has been an increase of around 15.7%, but over the last year, they have lost around 44.4% of their overall value. Analysts are looking at the overall stock's performance, and they believe that the share price should be trading at around $6.80, and this means that these particular analysts believe that the share price is set to pull back, and then it's going to increase after they achieve profitability. But until then, the share price could fall back down to as low as $6 according to some professionals. Now, not all professionals think the same on this, as we just went over previously. A Jefferies analyst believes the company is undervalued and how it could surge to $8 to $10. On the other hand, we have Morgan Stanley, who has a $6 price target, Oppenheimer has a $7 price target, Credit Suisse has a $7.50 price target, which is the same price target as a Piper Sandler analyst, and then lastly, we have a Wedbush analyst who also gives them a $6 price target. But we also need to make sure that we take these price predictions and price targets and future forecasts with a grain of salt. Now, the good news is, according to their compounding annual growth rate, or at least the current metrics that the company has achieved, there has been various stock forecasts for this company that go as high as $14.60 for the year of 2023. However, I personally think this is actually too bullish. I don't think the company will achieve a $14.60 price target throughout the year of 2023, just because I don't think the financials are there yet. Considering various accounting ratios, I don't think it's wise to bet on anything over a $10 price target. Now, I do think the company potentially could surge up to $10, especially after they become profitable on a GAAP basis, but until then, I wouldn't listen to investors who are trying to overhype this company. Now, if you do believe in a $14.60 price target, you may also want to look into the current projections for 2024, which is a $20.80 price target. Then we also have a 2025 price target of $26.90 and a 2026 price prediction of $28.70. But again, there is no real math or analysis behind these. This is just a computer projecting the future share price based off of this past performance. We have not looked at what DCF models are saying, and we have not consulted their overall financials. A computer is just using their history of growth, and then it's projecting the next 4 years of the share price. So as you can see, some investors are split. Some investors are very bullish who believe in these share prices. We have some analysts who are rather bearish who believe in these share prices. And then we have financial reporters and other professionals in the middle, such as me, which believes the company could be trading anywhere between $8 to $10 throughout the next 12 months, or at least until the company becomes profitable. Or once the company becomes profitable, that's when we're going to see their overall share price increase. It's always good news to say that the media is somewhat bullish on this company, as well as various retail investors such as myself, and it looks like SoFi Technologies will have a good 2023 and hopefully an even better 2024. But I would love to hear your thoughts down below. Don't forget to go and smash that like button for more videos just like this one, and I will see you in the next YT video.